What's going on, guys? This is Tom with StockedUp. I want to go ahead and start the video off by congratulating everybody who got into Bank of America yesterday before it went ahead and fell. I went ahead and called that out in Discord yesterday, and a lot of people got into the puts, and they did end up going down about 75 to 100% whenever they were at their lows. I ended up getting out at about 60% because I waited a little bit too long, but you could have gotten out a little bit lower. But the thing is that Bank of America, they had very bad earnings, just like JP Morgan and Wells Fargo the day before. So that's what gave us a very good indicator that Bank of America was going to have very bad earnings here. If we go ahead and go up to the news up here on the left, I'll type in Bank of America. And this is a very good way to get news, guys. All you have to do then is just scroll to like before open. Bank of America profits fall 45%. I'll put it up on the screen. You can read the report right here. Bank of America profits fall 45% in the first quarter, and the bank set aside billions of dollars to cover potentially bad loans during the coronavirus crisis. So if you think about it, there could be a pretty bad thing going on, just like 2008, because if you think about it, if people aren't able to pay their loans right now during this coronavirus deal, obviously that's going to cause big problems for banks. And I guess that's really what's causing them to go down right now, is that they had to set billions of dollars aside to cover those extra costs, and that's something that's going to make these banks go down, guys. So if you're holding Bank of America long term, I would honestly recommend getting out. I was holding it long term, and I sold for a little bit of a gain. I got in at like 22.60, and I got out at like 23.25 or somewhere around there. A little bit of a gain, but it was supposed to be a long term play. But with earnings like this coming out, I went ahead and got out at that small gain. So I definitely wouldn't be holding this very long term right now. What I would do, though, is go ahead and wait, because it will be a good play in the future, but you just have to catch it in the right spot. And if you guys want plays like Bank of America sent to you every day, just check out the statistical modeling link below. Mike sends those plays out 30 minutes before close every single day. It's a fantastic program. You get the picks, one-on-one support, and videos teaching you the options. For the money, you guys will not find a better service with one-on-one support. Definitely check it out. As far as plays for tomorrow, I'm still a little bearish on Bank of America. They fell today before market opened, and then whenever market opened, they stayed and they consolidated right on the 500 SMA here, and they bounced off of it like 3 times, and then they're down. So I think that they could still go down. Definitely. A couple of my customers went ahead and held some of their puts. I know some guys bought 4 puts, some guys bought 10 puts. So what they did is some of them, for example, sold 7 today, and now they're holding 3. Some of them sold 5, now they're holding 5. Some of them sold 4, now they're holding 1, and they're happy because it's a risk-free play. And that's what you get with these options sometimes, is that you can double down on them sometimes and be risk-free. So you can take all your money out, and then you have money in there still, and you're risk-free, and that's exactly what you want. But I think another good play for tomorrow will go ahead and be VXX calls. And what that's going to be is VXX here, volatility index, the VIX. This is what this follows. VXX is just an ETF. So keep in mind, do not hold VXX long term or any leverage ETF, because leverage ETFs always go down long term. Just let me go out to the chart here, the max 1 day. You can see if I scroll way back, well, I can't go far enough back, but if I could go far enough back to where this reverse split, let me fix that here. 25 years day. Okay, it's not letting me because VXX went ahead and stopped. They were actually off, like their ticker was not even allowed trading for a little while, which is very strange, but then they came back to market. But whenever they came back to market, you can obviously see that it's meant to go down over the long term. You can see it just obviously just goes straight down, and then it has these big pops like this, but it is meant to go down over the long term. But a good play for tomorrow could be VXX calls, because what we're looking at is we're looking at earnings on all these banks and earnings on all these different companies. So what we're looking at is the S&P 500, and we want the S&P 500 to be down. I know I talked to a couple customers today, and I thought the VXX will go ahead and go up tomorrow. And what we really want to see is the S&P 500 continue to fall below this 500 SMA here. And it has tanked on open here, but we need it to fall a little bit lower to get down into this open range, so that we can fall from 2740 down to like 2640 or 2660. If we can get a good play on VXX calls, or maybe puts on SPY, and it moves between this range here, you could make a very significant amount on options, like 100% plus, very easily. And that's the great thing about options, guys, is that you can risk $50 to make $100 to $200, even $300 very easily with options, if you can have simple technical analysis skills and you can identify these patterns. If you see that ES is trading below the 100 SMA here, the chances are is that it's going to come back down and touch the 1000 SMA, at least the 500 SMA. So what we're doing now is that we're waiting for it to go and come even lower below this 500 SMA. It might consolidate up tonight and then fall tomorrow once the volume picks in. It's going to have some volume to break this 500 SMA. Every single night, it doesn't just break SMAs. It did right here, but it had a lot of volatility, and it did end up falling a whole bunch that day too, which was last night going into today. And that could follow the banks. All the big banks went down yesterday with terrible earnings, and then Bank of America could have drawn the market down today. If we look at my watch list on the left, you can just see down. Every single stock pretty much is down 4% plus on average, I'd say. I would put the average like right around a 3.5% drop today between all the stocks on my watch list. Some of them falling like 11%, some of them falling 6%. Like Bank of America fell like 6 to 7%. Wells Fargo fell again, another 5%. They had a big drop yesterday. They went down even further. They're down 12% over the past 2 days. Maybe look for Bank of America to continue that same trend and then go down for 2 days as well. And right now with puts, the only thing to be really worried about is that if we go to SPY or /ES, the biggest thing to be worried about is that it bouncing off this 500 SMA, because that is a very big point for it. It does bounce off of it quite frequently, as we can see here, for example. Look at it bounce off of it right here and then fall down that day about 3%. That's a pretty big drop on the S&P that day. It has played the 500 SMA in the past, and if we go ahead and look at it, it is right on there right now bouncing. I don't know which way it's going to go, up or down. Obviously, nobody knows for sure. But if we go ahead and look at the futures, you can see it bounce very, it's more precise, I guess, on the futures than it is on SPY, because SPY is an ETF, of course. So it always has a little bit more movement than ES will. But ES bounced off it very nice, and it's going up now. At least going up for the short term, very short term. What I'm saying is before open tomorrow. Open tomorrow is where I would hope that it breaks this 500 SMA. I don't think it can break this until open tomorrow, though. If it does break it, then definitely expect us down towards this 1000 SMA, which is 2660. I'm not saying it's going to hit it tomorrow, but I think it will hit it eventually. And for those of you who stuck around this far, an extra little bonus is that I'm going to show you which SMAs I put on my chart. If you look right here, like for example this yellow SMA, the stock /ES bounces right off of it right there. Very good prime example of why these SMAs are very important to have on your chart, because stocks bounce off of them very consistently. As we can see, if we go back in time here, let's just go back to a random day. I'm just going to randomly scroll around and let go. Okay, now let's see how much times it bounced off the SMAs here. Like look at this 100 SMA, which is a very popular SMA. You can just see the stock bounce right off of it like 3 times right here, the 100, and then just follow the 100, bounce off here, bounce off here, bounce off here, and bounce off here. So it's very important, guys. These stocks move on these SMAs. I'm not sure if it's the SMAs, but whatever it is, they calculate a very good area on the simple moving average, and that's exactly what we need. And if we go ahead and go to our studies up here, go to edit studies, all you have to do is search in this box right here, simple moving average. Okay, and then all you're gonna have to do is click this and then click add selected. You're gonna have to click that 1, 2, 3, 4, 5 times. So you'll click add selected 5 times, and then what you'll do is that you'll go ahead and come up here and you'll type in MOVAVG, and you'll find the one that says exponential. So I'll come down here and find MOVAVG exponential, click add selected on that one, and then come right over here to all these over here where it says simple moving average. Now all of yours are going to say 9, so you're going to have 5 simple moving averages that say close, 9, 0, no. And so what you want to have to do is you want to click this SMA and then come up here and click the little this little wrench icon here, or bolt, which is the settings. So you'll click that, and then you want to change the length right here. So you want to change the length to 100 and then change the color to purple, and then you'll click OK, and then you'll do that for all of these. So you can have custom colors if you want, or you can copy my colors. I'll go through them all really quick. So then for my 200 SMA, mine are out of order, but for the 200 SMA, you're going to want yellow color and change it to 200. For 300, you're going to want a cyan color and change it to 300. And then for 500, you're going to want a blue and change it to 500. And then for 1000, you're going to want to change it to red and make it 1000. And then for the moving average exponential, you're going to want to set it to 500 and make that one green. And what that does is it allows me to differentiate all these on my chart. So I have the red 1000, the green 500 EMA, the blue 500 SMA, the yellow 200 SMA, the cyan 300 SMA, and then the purple 100 SMA. And that's how you can remember them, and you will remember them over time, but at first keep in mind you will not remember them all right away. But that's how you put them on your charts, and you can see even right now SPY is bouncing right off the 500 SMA, and it came very close to the 500 SMA right here. So imagine if you would have bought some calls right here expecting a nice bounce off that 500, you would have gotten a very nice 1.4% bounce on your SPY calls. At the very end of the day, you could have sold for a very nice day trade gain of probably about 30 to 50% on SPY. If you guys enjoyed the video, please give me a comment down below. Very appreciated. Thanks for watching.